What's going on, everyone? Eric Roach here from Summit Metals, and I need to tell you something that could absolutely change your financial future. Goldman Sachs and JPMorgan, two of the most powerful financial institutions on the planet, just dropped a bombshell prediction that has me fired up. They're saying gold is going to 4,000 an ounce by mid-2026. That's not some random YouTuber making wild predictions. That's Goldman Sachs and JP Morgan putting their trillion-dollar reputations on the line. But here's what got me absolutely blown away. Natasha Kaneva from JP Morgan says the timeline from 2,000 to 3,000 and now 3,000 to 4,000 could be half as long as it took to go from 2 to 3,000. We're talking about a massive acceleration that could happen in just 12 months. And if you think that sounds crazy, wait until you hear what China's central bank is doing behind the scenes. They just bought gold for the 7th straight month, and the data I'm about to show you is going to absolutely blow your mind. Before we dive in, if you're not subscribed yet, hit that subscribe button right now, because this could be the most important market analysis you watch this year. Oh, and another big announcement. We're giving away with this video our silver starter pack. Details to follow later in the video. All right, everyone, let's talk about what's really happening in the gold market right now, because the numbers are absolutely staggering. And this isn't just another market cycle. This is a fundamental shift in the global financial system. First, let me give you the current state of play. Gold's trading around $33.19 an ounce as of this recording, and it's up an incredible 26.7% year to date. Now that alone should get your attention. But what's even more remarkable is the institutional backing behind these price movements. But here's what makes this even more compelling, and this is where it gets really interesting. According to the latest data from the World Gold Council, global gold ETFs just recorded their strongest first half since 2020 with 38 billion in inflows. Let me repeat that, 38 billion in just 6 months. The total assets under management for gold ETFs hit a record 383 billion, up 41% from previous levels. Now you might be thinking, okay, Eric, that sounds impressive, but what's driving this? Well, that's where things get absolutely fascinating, and it's not just about traditional safe haven demand anymore. This is about a complete restructuring of the global monetary system. And if you're not paying attention to this, you're missing one of the biggest wealth transfers in modern history. And before I continue, if you're finding this valuable, please do drop a comment below and let me know. Are you positioned for this potential gold rally, or are you still on the sidelines? Just know I read every single comment, and I want to know where you stand on this. Okay, here's where the story gets absolutely fascinating and frankly, a little bit scary if you're holding too much cash or bonds right now. Central banks around the world are going at an unprecedented gold buying spree. We're talking about a fundamental shift in how the world's monetary authorities view gold versus our US dollar. According to JP Morgan's research, central bank gold holdings rose to nearly 20% of official reserves by the end of last year. That's up from around 15% at the end of 2023. But here's the number that should make every investor pay attention. Central banks are expected to buy an additional 900 tons of gold this year. To put that in perspective, that's worth roughly $60 billion at current prices. Now, who's leading the charge? China's central bank. And this is where it gets impactful. China increased its gold holdings for the 7th straight month in May, bringing their total to 3.258 trillion. But here's the kicker. While they're buying gold, they're simultaneously reducing their holdings of U.S. Treasuries. From 784 billion in February, China's U.S. debt holdings dropped by 757 billion in April. William Pesek from Yardeni Research put it perfectly when he said, what's driving this gold rush is central banks' waning confidence in the dollar as a reserve currency. This isn't just about China either. The BRICS nations, Brazil, Russia, India, China, and South Africa are all actively working to create alternatives to the dollar, and gold is at the center of that strategy. Gregory Scherer, who has JPMorgan's base and precious metals strategy, believes this trend has much further to run. He's projecting around 900 tons of central bank buying in 2025 alone. Okay, now let's talk about the geopolitical factors that are absolutely supercharging this gold rally, because this isn't just about monetary policy. It's about a fundamental reshaping of the global financial system, and the implications are massive. This shift toward gold really accelerated in early 2022 after Russia invaded Ukraine. Why? Because the world watched as the U.S. and Western allies froze Russia's bond and cash reserves. That was a wake-up call for every central bank on the planet. Gold, unlike digital assets or foreign bonds, is highly liquid and much less likely to be confiscated or frozen. But the geopolitical risks haven't stopped there. Stephen Muldowney recently told Investors Business Daily that he expects geopolitical risk to increase significantly over the next 12 to 18 months. His exact words were, "The world will become messier before it gets better. And when the world gets messy, gold is a safe investment." And he's absolutely right. Just look at what happened in June. The Israel-Iran conflict escalation drove massive inflows into North American gold ETFs, 4.8 billion in a single month, the strongest since March. European investors followed suit with 2 billion, the strongest since inflows in March. And even Asian markets, which have been cooling off, saw $610 million in positive flows. But here's what's really interesting about the current market dynamics. We're seeing a perfect storm of factors all pointing in gold's favor. The Federal Reserve is signaling potential rate cuts. Markets are pricing in 3 cuts by the end of 2025 and 2 more in 26. When interest rates fall, the opportunity cost of holding non-yielding assets like gold decreases, making it more attractive. At the same time, we're seeing persistent inflation concerns. Muldowney pointed out that U.S. trade tariffs have the potential to increase consumer prices, and gold has historically been one of the best hedges against inflation. Okay, now let's break down the ETF flow data, because this is where we can really see the institutional money moving, and the numbers are frankly staggering. This is the kind of data that separates the serious investors from all the noise. The World Gold Council just released their latest data, and it shows that global gold market liquidity reached 329 billion per day in the first half of 2025. That's the highest level since 2018. This tells you just how much institutional interest there is right now. We're talking about massive liquidity. But here's where it gets really interesting even more when you look at the regional breakdown. North America led the charge with 21 billion in first half inflows, recording their strongest Q1 performance in 5 years. But the real surprise was Asia, which saw a record 11 billion in inflows despite only representing 9% of global assets under management. China alone accounted for 8.8 billion in inflows in the first half. That's 85 tons of physical gold. The World Gold Council called this unprecedented and attributed it to spiking trade risks with the U.S., growth concerns, and the surging gold price itself creating momentum. Europe finally turned positive after nonstop losses since the second half of 2022, with 6 billion in inflows. The UK led European inflows in June, likely due to the Bank of England's dovish stance with expectations for future rate cuts. What's particularly noteworthy is that individual investors are also participating in this rally, though on a smaller scale than institutions. According to State Street Investment Management, of the nearly 50 billion in ETF inflows into non-equity and fixed income funds during the first half of 2025, about 20 billion went specifically to gold ETFs. The broad-based participation from central banks to institutions to individual investors is creating a self-reinforcing cycle that's pushing gold holdings to levels we haven't seen since August of 2022. Now, if you're thinking about how to potentially profit from this gold rally, let me tell you why physical precious metals are the way to go and why Summit Metals is the partner you want for this journey. JPMorgan's Natasha Kaneva, who heads their global commodity strategy, has been particularly bullish. She raised JPMorgan's price targets, expecting gold to average $36.75 an ounce in the fourth quarter of this year, then rising to $4,000 in the third quarter of 2026. Previously, the firm didn't expect gold to touch $4,000 at all next year. So this represents a massive upgrade to their outlook. But here's the thing. When we're talking about this kind of monetary system shift, central banks losing confidence in the dollar, and this geopolitical instability, you want to own the real thing. You want physical gold and silver in your possession, not paper promises or digital entries in some computer system. Think about what happened to Russia when their reserves got frozen. Think about what's happening with bank failures and financial system stress. Physical precious metals can't be hacked and they can't be frozen by governments. And here's what makes Summit Metals different. We're not just selling metals and forgetting about you. We're your partner in this journey. When you're ready to sell, we're here to buy back your metals at highly competitive prices. We can handle the storage, the insurance, the logistics, and even ship directly to you everything you need to make physical precious metals ownership as simple as humanly possible. All right, so let me wrap this all up for you and give you the key takeaways that could impact your financial future. But before I do, those who live in the U.S., who press the like button for this video, comment, and subscribe to our channel will be automatically entered to receive our 5-ounce silver starter pack. We cover all the costs and ship right to your door. How's that for a return? The winner will be announced in our next video. All right, now to wrap up. We're witnessing what appears to be a fundamental shift in the global monetary system. When Goldman Sachs and JPMorgan both target 4,000 gold in mid-2026, and when central banks are buying 900 tons per year, simultaneously reducing their dollar holdings, that's not just a trade, that's a structural change that could last for years. It took nearly 2 years for gold to go from 2 to 3,000. But if JP Morgan's Natasha Kaneva is right, the move from 3,000 to 4,000 could happen in about half that time, roughly 12 months from now. The drivers are all still in place, and if not anything, they're accelerating. We're living through one of the most important financial transitions in modern history, and I want to make sure you're getting all of this information. Now, if you're ready to take action on this information, I want you to check out Summit Metals Auto Invest program. Look, I've shown you all the data. I've shown you what the biggest financial institutions in the world are saying, but information without action, it's worthless. Our Auto Invest program lets you systematically build your physical precious metals position over time. You're not trying to time the market. You're not putting all your money at once. You're building wealth the smart way, consistently and systematically. You can start with as little as you're comfortable with, and you can adjust or stop anytime. And remember, when you're ready to sell your physical metals, Summit Metals is here to buy them back at highly competitive market prices. We're your long-term partner in precious metals investing. Don't let this opportunity pass you by while you're waiting for the perfect time to get started. Goldman Sachs and JP Morgan aren't waiting. Central banks aren't waiting. The smart money is moving now. Remember, none of this is financial advice. I encourage you to do your own research and consult with a professional, but the data is clear, the trends are undeniable, and the opportunity is right now in front of you. Thank you for watching. This is Eric Roach with Summit Metals, and I'll see you in the next video. Don't forget to like, subscribe, and comment for your chance to win one of our starter packs, and check out our Auto Invest program. Let's build wealth together. with physical precious metals. Happy stacking.